Hello everyone, and welcome to this presentation of a powerful strategy for capturing trending markets. Now in today's presentation, I'm going to show you an example such as this where you could have actually purchased this stock down at these levels, and I'll show you the entry technique specifically so that you'll know exactly how to implement it. In fact, you'll know the exact day, such as right here, where you should be buying. Once again, I'd like to welcome everyone. My name is Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with our website, we are first and foremost an educational website. Our goal is to teach you how to trade with a specialist edge so that ultimately you can make and empower yourself with your own decisions so that you can basically make your own trading decisions. It's our belief at Specialist Trading that the reason why most traders fail, upwards of 80%, is because they're relying on an outside source to tell them what to do, how to trade, what market to trade. We feel that that's counterproductive and that the only way one becomes successful or consistent in trading the markets is by making their own trading decisions. And the reason why most traders don't do that is because they haven't been supplied with the proper and fundamental education. So that's what we do. We provide all the education you need. Now, the reason I can do this is because I've been trading myself for 40 years. I started out trading on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years. 9 of those years I was a specialist. A specialist was simply one of those floor traders who made markets in stocks. I made markets in roughly 50 stocks, so if you wanted to purchase or sell any one of those particular issues, you had to go to the trader who specialized in them. I traded during the crash of 1987 and the bull market that followed, and around 7 or 8 years ago I teamed up with Pro Trader Strategies and developed Specialist Trading, where all I do is mentor and teach my students all the information and education that I've accumulated in my nearly 40 years of trading. So that's what we do at Specialist Trading. We're an educational company. Now I'm going to show you and teach you how to spot a really great entry technique using this particular strategy. But before we do, we are required to show you this, so please take a moment to view our disclaimer. Once again, I'm going to show you a lot of performance results using strategy that has this entry technique, but please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. So as you are taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us, if you haven't done so already, to follow us on Twitter. This is our handle right here, at SPCLSTTRADG. Excuse me. I post daily information anywhere from financial wisdom to actual signals that our strategies have generated. Now, this is posted on a daily basis, but it is rather limited because of the way Twitter is set up. So if you'd like some more in-depth information, more detailed, then Pro Trader Strategies has structured a Facebook page. You can go there and see a lot of videos, a lot more information about what we do, myself, and how we teach at Specialist Trading. So there's lots of ways to find out about what we do to get more detailed information. Now, as I first stated, we are an educational company. See, we don't just want to force feed you with signals or tell you what market to trade or tell you what the perfect time frame is. We want to provide you with information so that you will be able to spot these setups on your own and make your own trading decisions and thereby decide whether you want to trade conservatively, you want to trade aggressively, if you want to enter at a certain point, if you want to exit at a certain point. It's all up to you, and this is how you get to that point through my mentoring and through my teaching of you all of these things. This is why we say my goal is to teach you, not to trade for you the way so many other websites do, but to simply teach you to put the power back in your hands. This is the same edge that was able to turn my trading around when I was struggling nearly 40 years ago, and this is what we try to put in all our students' hands as well. I'm going to show you a great technique with this strategy, the rules all included in this, but please remember that since this is an educational course today, I know you will have some questions. If you could kindly wait till the very end of today's class to ask any questions. Many times, if we slow down the presentation, it's a little more difficult to go through. So I have a lot of information to give you. Just hold off for the next 20 or 30 minutes, and then we'll reserve the last 15 minutes for any questions that you may have. I'll answer just one question, which is probably the most popular, and that is this being recorded? Yes, it is. We record all of our webinars, so if you have to leave early or if you're having technical difficulties, you can go to Pro Trader Strategies and request a link to this particular session. Okay? All right, so please wait till the very end to ask any questions, and let's begin. Now, we're going to talk about trading strategy number 1 today, and most specifically, we're going to give you the entry rules, the initial entry rules to this particular strategy. This is usually reserved for the members of specialist trading, but we're going to give you these rules today in their entirety. Let's talk about some of the highlights of this particular strategy. It's extremely versatile. It trades stocks, E-mini futures, Forex, and I'm even going to show you some commodity examples as well. So it doesn't matter if you're an intraday trader or if you only trade one specific market or maybe dozens of markets, this will work on any market. It's a very consistent pullback strategy. So we're not looking to, pick tops and bottoms. We're looking to buy on a pullback, on a little sell-off within the trend. Once again, this can be applied to virtually any market, any time frame, in any direction. So it doesn't matter if you trade intraday tick charts or it doesn't matter if you trade weekly charts. That's how versatile this strategy is. Now, if you are a day trader, you'll roughly average anywhere between 1 and 3 trades per day, depending on the market, depending on the volatility. That's just an average. And if you're a position trader, meaning you like to hold positions overnight, you can average anywhere from 2, possibly even 3 trades a week, depending on how many markets you're following and depending on the volatility of the market. As with any of our strategies, as with all of our education, we always tell our students to learn the strategy first. I know your eyes are going to light up when you see how simple it is to be consistent using strategy number 1. But please do not jump in feet first. We want you to paper trade first, okay? So before you apply any real funds, make sure you paper trade this method just so that you fully understand the process. Our edge at specialist trading is not some get-rich-quick scheme. We do not want to promise anyone that they're going to be buying a brand new car by the end of the week. What we try to instill in all of our students is consistency, all right? That means that all of our techniques are very consistent, whereas they can have 2 steps forward, 1 step back approach. We're not going to promise that every trade is a winner, but when we do have small losses from time to time, our methods are extremely resilient and they bounce back rather quickly, okay? So let's begin. These are the indicators you will be using for strategy number 1. A 50-period simple moving average that you must apply on the chart. Very simple. It's on every charting software package. And a 21-period Donchian channel. Now, this is another popular tool. It's usually found on just about virtually all charting software packages. If your charting software does not provide it, I would go to the tech support and ask them if they can provide it. If they still don't, then I believe there are a couple of sites online that are free, such as freestockcharts.com. You just do a Google search for Donchian channels, and they will be able to provide you with this tool. All right, so here are the buy rules, and don't worry if you don't copy these down. Once again, this presentation is recorded, so if I go through these rather quickly, it's because I want to show you the slides. I think you can learn these rules much better by simply looking at the slides on the charts rather than just reading the rules visually here. So I'll just read them, and don't worry once again if they don't make sense at this point, or if you can't copy them all down. This will be recorded, and you can watch the recording at your own leisure. All right, if we are buying, price must be above the 50-period moving average. Now, the ideal scenario would be for all the bars to be above the 50-period moving average. But even if some of the bars were oscillating above and below, all we need is for price to close above and for us to enter above the 50-period moving average. Now, we also need, for rule number 2, we need all 3 Donchian channels to be headed in the same upward direction. Now, the Donchian channels, you'll see in just a few moments in the examples, kind of have a stair-step approach. They're not smooth the way a moving average is or Bollinger Bands. They have this kind of jagged up, sideways, or down, sideways approach, a stair-step approach. And they're not all going to be in sync. There are 3 Donchian channels. We just want to make sure that they're all going in the same direction, okay? Now, what happens usually if we are in an uptrend, price starts to rally. It starts to go higher, obviously, and it starts to touch and hug that top Donchian channel. What we want to do is look to buy when price starts to decline and the bar's range is either touching or entirely below the middle Donchian channel. This is our setup bar because this is the pullback we're looking for. This is the sell-off in an uptrend. Once we've established a valid setup bar, we're going to buy 1 tick above the high of that setup bar, and it must happen on the next bar, okay? Remember, always paper trade first before applying real funds. Let's go into the real examples, real-time examples here, and we'll show exactly how simple this is with some charts here. All right. Now, this is generic chart, I specifically took out the title and the time frame because I want you just to see that this is a process, and I want you to become more familiar with the process as opposed to looking at what this issue was or what this future was or what time frame, because it doesn't matter. I don't want you to focus on that. All right, so someone looking at this would say, well, Steve, there's no trend here. We're just kind of going higher, then lower, then higher. So we're kind of going sideways in a range. I've always been taught to stay out of sideways markets because that's where you get whipsawed. So there's no real trend here. That's not true. First thing we always do with specialist trading is we apply the 50-period moving average, as we've done right here. And then we ask ourselves, where is price in relation to that 50-period moving average? Price is above. So that means the overall trend is up. If the overall trend is up, are we going to be selling in an overall uptrend? No, we're only going to be buyers. So don't even think that you're going to be selling anything if price is above the 50. This consistent little simple rule, in our opinion, has already eliminated half of your losing trades just by applying this because you're in sync with the overall trend. The reason why most traders fail is because they're usually selling above the 50 period and buying below. Well, that will work every once in a while, but remember, we're trying to be consistent over time so that you can be trading 20, 30, 40 years down the road, not just for 6 months and then lose it all. So we want to give you sound, fundamental tools that have stood the test of time. Remember, we want to educate you, and this is one of the best things you can do right now to start trading. If you're above the 50-period moving average, regardless of time frame, regardless of market, you should only be taking buy signals, regardless of what strategy you're trading. All right, so since we're trading strategy number one, this is a pullback strategy. Remember, a pullback is simply you're looking for a rally in price, and then price starts to pull back. It starts to sell off. And so we want to purchase somewhere around these levels. This would be the ideal place to be buying, right? So how do we do that? Well, we add some structure. Since we know that the overall trend is up, now we add the Donchian channels. These are what the Donchian channels look like. There are 3 channels, and you see how they have that type of stair-step approach. Higher, sideways, higher, sideways. Remember, they're not all going to be in sync. Sometimes you will see one channel going completely sideways, while the other 2 are moving higher. All that matters is that when you have a sideways bar, this is where students get confused, it doesn't mean that you're not trending upwards. Always look to see where it came from. If this sideways bar, if the previous movement was lower, if it came from a lower setting, well then you're in an uptrend because the stair step is going up. So you want to see them all in the same direction. And what price usually does in an overall uptrend, it will rally, it will go higher, and price will hug that top Donchian channel. That's fine. We're not going to do anything yet. What we want to look for is the sell-off. This is what we're looking for. And so we're going to track price, the price bars, and as they come down and touch the median line, that's our setup bar. Do you see how this one bar touched that middle line? It didn't close below it. We don't care where it closes. It absolutely makes no difference if it closes above or closes below. All that matters is that it touches that middle line. That's our setup bar. And we are going to buy where that green horizontal line is. But we can only buy in the next bar. So did that next bar trade there? No, it didn't. So there's no trade. Okay, and it's good we didn't buy it because look at it, price went lower. But as we look at this next bar right here, we are still above the 50 period. The Donchians are still headed in a stair-step upward approach. So therefore, this bar is now a valid setup bar. And we're going to buy at this green horizontal line. And we continue to do this and track this process until ultimately we do purchase right here. Because as you see, these were all valid setup bars, but we just never entered because we never traded above on the next bar. We have to trade above, and we only did on this bar right here. So there's where we entered. And then look what happened. It was off to the races. We went up. See how simple that is. So we look for an overall uptrend. We wait for price to sell off and touch the median line. Then we start tracking it. And we're going to buy if we trade above the previous bar's high. And this is where we entered, and that's where price started to go higher. All right, those were the buy rules. Let's look quickly at the sell rules, then we'll go to a lot of examples here. Now, conversely, if we're selling, price must be below the 50-period moving average. And now we want to see all 3 Donchian channels headed in the same downward stair-step direction. Now, we see that the price channels are headed lower. The overall trend is down because price is below the 50. So this means price will be headed lower and it'll be hugging or touching the lowest Donchian channel. But as what often happens is we'll start to get a bounce. We'll start to get a rally. This is where many people get confused and they think that, well, we should be buying here. No, we're below the 50-period moving average. So this means we're looking to sell because the overall trend is still down. So once price starts to rally, we're going to look to sell when a rising price bar's range is either touching or entirely now above the middle Donchian channel. This is our setup. We've just reversed the rules. And this time, instead of buying one tick above, we're going to be selling one tick below because we're going short. Please remember, these are the rules, but always paper trade first. When applying this entry technique for strategy number 1, please learn the strategy so that you fully understand the process so there's no questions and doubt in your mind as to how to implement the strategy entry rule. Okay, so looking at this, one would say, okay, well, I see here that we started to bottom out. This would have been a good place to buy right here. And then I would have had to got out quickly because price really sold off, okay? And it looks like we should be looking for a place to buy down here. We don't think about that. Don't overcomplicate your trading. The only thing you want to firstly do is apply the 50-period moving average. Then you ask yourself, where is price in relation to that? Is price above it? No, price is below it. So what is the overall trend? The overall trend is down. If the overall trend is down, are we going to be a buyer of any strategy? Absolutely not. We are only going to be sellers, okay? So this is what we're going to be doing. We're only going to be selling this particular strategy or technique, okay? Or for that matter, any strategy or technique. You will have more consistency if you are in sync with the overall trend, and the easiest way I know how to do that is to simply apply a 50-period moving average. Now remember, I specifically left out the time frame because I don't want you to say, well, does this only work for daily bars or does this only work for 5-minute bars? It works for any bar, any time frame. That's why I left that out so you wouldn't focus on that and get attached to thinking it only works for an intraday bar or a monthly bar. It doesn't matter. And it doesn't matter if this was a currency pair. It wouldn't matter if it's a stock. It absolutely wouldn't matter if it's a commodity or a future. Okay? All right, so since the overall trend is down because we're below the 50, we want to look for price to bounce and we want to sell. And obviously we'd want to sell somewhere around these higher levels, right around here, okay? Because price is below the 50-period moving average. So how can we sell at these levels right here? We add the structure, which is the Donchian channels. And now we see that it's actually kind of easy to pinpoint where to get in. Why? Because we see that all 3 Donchian channels are headed lower, all right? They're not all in sync, but they're all coming from a higher level, all right? While some may be going sideways, others may be going headed lower. That's okay. They're all going in the same downward direction. So if the overall trend is down, we usually see that price is headed lower, but then price inevitably will start to bounce. The buyers will come in. This is where people get confused and they think, okay, the sell-off's over, I'm going to jump in and buy. No, we look at this as a selling opportunity because the overall trend is down. We're only going to be sellers. So we want to sell at as high a price as we can. Therefore, we wait for price to bounce. Do we sell here? No. Do we sell here? No. Here is our first setup bar, okay? Because we've rallied and we touched the middle line. We didn't touch the middle line with these bars, but we finally touched it. So this is our setup bar. But we're not going to sell at the market because we don't know if we've stopped going up. We will sell when price trades below here. And it has to trade on the next bar. All right, so here's the next bar, whatever time frame we're looking at. Did we trade below here down to this green horizontal line? No, we didn't. So there's no trade. All right. So this doesn't mean that you walk away from your computer and say, well, I guess I'll wait another week or another month for another setup. No, the very next bar is a setup as well. Why? Because we're still below the 50 period. All the Donchian channels are still headed lower, so the requirements are met. So we can sell on the next bar if we trade below, and we did. So now we're short at these levels, and look what happens, okay? We got in right at the top of this pullback. So this is the process behind strategy number 1, one of our most popular as well as one of our most consistent pullback strategies. Why? Because we're in sync with the overall trend, and we're not trying to pick tops and bottoms. We're trading in sync with the trend, and we're waiting for price to pull back. So therefore, if the overall trend is up, we're waiting for a pullback to the downside. We're waiting for a sell-off. If the overall trend is down, as it is right here in this example, we're waiting for a little bounce. We're waiting for a rally. Remember, this is all done without looking at news events. This is all done without going to a chat room or trading room. This is all done without relying on what some trading guru was saying in a webinar or on TV. Remember, as I stated in the very first opening statements of this webinar, the reason why most traders fail is because you rely on an outside source to tell you how to trade. They're either telling you what market to trade, what signal to take, what time frame to trade. That, in my opinion, is a recipe for disaster. And I'm saying this from firsthand experience because that's the way I first started trading when I first started. And I couldn't make a dime. I had a very difficult, frustrating, very terrible time trying to make ends meet. My mentors taught me to release all those things, to not focus on them, but just focus on the chart in front of me. And that's when my trading started to become consistent. This is what has allowed me and sustained me for trading nearly 40 years. So this is what I'm trying to teach you as well as all of my students at Specialist Trading. So just rely on sound fundamental techniques and methods that have stood the test of time. And this is how you get to this road to consistency. Okay, so let's look at some more examples. Now that you understand the process, let's look at some more repetitive examples so that you really fully understand the process as we see it here in its entirety. And then in the next 15 minutes or so, once we're concluded, then we'll go over any questions that you may have, okay? All right, so let's look for stocks first of all. And we're looking at this example in FSLR, which was in December coming into January. All right, someone looking at this would say, well, once again, Steve, it looks like we're in a range. We go higher, we go lower. It looks like we tried to bust out and we couldn't do it. In fact, we gapped down lower. So all my training, all of the webinars and all the books I've read most likely say because of this gap down here on large volume probably, we're probably going lower. So I probably want to sell this, okay? Remember, overcomplicating is what kills your trading. All we have to do to find out what side of the trade we want to be on is simple. We add the 50-period moving average. And then we ask ourselves, where is price in relation to the 50-period? It's above. So are we going to short anything and sell anything if we're above? No, we're only going to be buyers. So therefore, we're looking to buy this. We don't care what anyone says. We don't care what someone says in a trading room or on TV. We are going to be buying FSLR. But we can't just simply buy at the market. We need some structure. We add the Donchian channels. And all Donchian channels, all three channels are in sync in an upward movement. Okay? So now we see that price back here in November was rallying. It was bouncing, touching the top, and started to sell off. As it sold off, it ultimately touched the median line. In fact, it was entirely below, just about entirely below. This was our setup. This was our buy setup right here. And then we purchased on the very next bar because we traded above it. So here's where we entered, and as you can see, look what happened to price. Price went straight up after that, okay? We basically would have entered around 54, and the stock went up a good 6 to 8 points in the next 3 weeks. Now you had all that room to move you could have taken 1 point, you could have taken 5 points. It was up to you. And now we see that price is starting to hug that top Donchian channel again. All right, now that's not a requirement, but many times you'll see this is what happens before it starts to sell off. So price came down. Did it touch the median line? No. So there was no buy setup here. Now on the gap down, where most people would think, well, we've got to sell this. There's probably some bad news, bad earnings, maybe a bad fundamental report. We don't concern ourselves with that. We're just looking at the chart. Everything you need to know is in the chart in front of you. The chart says we're still above the 50-period moving average, meaning we still closed above, and the Donchian channels are still headed higher. So I'm still a buyer, and this is a valid buy setup. So we have just generated another setup bar, and then we entered to go long right here on the next day at 56 roughly. And look what happened. The stock gapped up 10 points in the next week, okay? So do you see how simple this is? We don't care about what the reason why this gap down, or some news came out, something happened in the world, or somebody said something. That's of no consequence to us. Everything you need to know is in the chart in front of you. Don't overcomplicate your trading. It's the easiest thing in the world to overcomplicate your trading. Anyone can do that. But it's the most difficult thing in the world to simplify it. But once you simplify your trading, that's how you get onto that road to consistency. All right, next example here, SWKS. This was at the beginning of February. This was just a couple of weeks ago. Excuse me. Someone looking at this would say, well, Steve, we are definitely in an uptrend, because I've always been taught that if you make higher highs, that's an uptrend. Now here we had a high, and then we pulled back, and then we had a higher high right here. So we basically have broken this top. We're just about to break these levels here. So I'm going to be a buyer of this, okay? That's not the way we figure what the overall trend is. How do we figure the overall trend? We add the 50-period moving average. Where is price in relation to the 50-period moving average? It's below. So are we going to be buyers? Absolutely not. We only sell below the 50-period moving average, and we only buy above. We don't do the opposite. This is why most traders fail, because they're out of sync with the overall trend. All right, so we want to sell, and obviously we'd love to sell somewhere around here, but how do we do that? Well, we add the structure, which is in the form of the Donchian channels. And we see that all Donchian channels are headed in the same downward stair-step progression. They're not all in sync. While this was going sideways, this was heading lower and this was heading lower. But all the channels were coming from a higher level previous to it. So this is our setup bar right here. We had an initial setup bar to go short, but we could only sell once we traded below, and we didn't trade there on the next bar. So now this is our valid setup bar, okay, because we're still touching the midline. We are still below the 50-period moving average, and all three Donchian channels are still headed lower. So now this is our valid setup bar, but we can only sell if we trade below it. So let's see what happens on the very next bar. This has to be on the very next bar, and guess what? We traded below it. So we're short roughly around 66, okay? And look what happens. Stock falls about 10 or 11 points in the next couple of weeks. It's simple. All we have to do is listen to what the market wants to do, because 99% of the time I found that the market tells you in advance what it wants to do. But for some reason, we want to listen to other outside sources, either some trading guru or some guy in a webinar like myself or some book. And that's what's supposed to be the right thing. But it's been my experience in nearly 40 years that the market tells you everything you need to know. All we have to do is listen to that instead of the outside sources, and we'll become more consistent in our trading. How about STZ? Okay, once again, it looks like we have a gap to the downside. I would say that we can't bust out above this high. This is so-called resistance, support and resistance. So it looks like we're going to be breaking down to the downside. Well, where is the 50-period moving average? Right here. And where is price? All the closes are above. So we're not going to be selling anything. We're going to be a buyer. Okay? We add our Donchian channels and we see that they're all headed in the same stair-step upward progression. Now we touch the top one and we started to sell off. Here's where we had our first setup bar, but we never bought anything because we didn't trade above it. Here's our second setup bar, and this was a valid one. So we purchased on the next bar. And you would have gone long roughly around 138, and the stock went up to around 145. So 7 points in the next couple of weeks. We touch the top bar again, and we begin to sell off, and here's our setup bar once again. All right, but we can't buy at the market. We have to trade above it. Okay, so here's a valid setup bar, and we traded above it right here, roughly around 141 you would have entered, and in 2 days the stock went up roughly about 14 points, okay, to 154, 155. Touch the top Donchian channel, now it heads back again. These are all valid setup bars, but we haven't traded above them yet until right here. Here's a setup bar, and we traded above it. Now remember, this is where most students have difficulty. They think, well, Steve, we didn't close there, so why did I buy? We're not interested in the close. All that has to happen is that it has to trade above it on the next bar. So you would have purchased right here about 144. And the stock went up to roughly 151, about 6 or 7 points in the next week or two, okay? And you have one last chance to purchase right here, another valid setup until you go even higher. So you see this whole way where you thought this was a sell, you were continuing to give buy setups through the market. MAR, here's another example where someone could say, well, Steve, this is definitely going higher. Look what happened. We were in a sell-off, granted, But then we had this last short-term top right here. We broke above it, and now we're making a high-level consolidation, some type of a pennant. So therefore, we're most likely going to bust out. Okay, so I'm a buyer of MAR. Where is price in relation to the 50-period moving average? Price is below. We're never going to buy below the 50-period. I promise you, if you add this simple rule to your strategy, to any strategy you're trading, you're really going to increase your odds for consistency because you'll be in sync with the overall trend. So since we're only going to be sellers, we add the 21-period Donchian channels, and it's easy to see that they're all headed in the same downward stair-step progression. Now we've hugged the bottom channel here and we start to rise. And here's where we finally touch the median line. See, all this time here, we never touched it until this bar right here. So this is our setup bar. And we're going to sell, but only if we trade below this on the next bar. And we did. So we traded below. We roughly went short around 68, I believe. And look what happened, okay? 10 points in the next month or so. This was coming in to February, just last month in MAR. Remember, the market usually tells you what it wants to do. We just have to add a little structure to determine how we're going to enter and jump on board. Now, we've shown you some daily bars of stocks. This can be easily applied to intraday trading. I know a lot of you are saying, well, Steve, I don't trade daily bars. I intraday trade stocks. Okay, well, here's a chart of Monster. This was last week on the 16th. In fact, this was a week ago today. All right, we're above the 50-period moving average. All the Donchian channels are headed higher. These were all valid setups where you could have purchased on the next bar and had a winning trade, okay? So that's how you can trade intraday. These are all three valid examples. You can also apply this to monthly bars. And remember that first chart I showed you at the very beginning of the presentation? That was a monthly chart of Apple. So many people looking back in hindsight probably say, boy, I would have loved to purchase Apple down here around the 60 level before it split and all those multiple prices. And this was down in July of 2013. This was about 3 years ago nearly, okay? How could we have taken advantage of that? Well, we apply the same rules. The entire time on these monthly bars, we were above the 50-period moving average. We came down, we touched the median line. We never traded above all of these setups until April 30th, 2013. Once we traded above the next bar, remember we don't have to close there, but the next time the monthly bar traded above, that's when we entered, roughly about 62 or 63, and the stock doubled in price coming into 2 years later, okay? This is all in the face of fundamental news. We don't care what the earnings were. We don't care what product they were coming out with. We don't care with who was the CEO. None of that matters. All we did was apply this simple technique to the chart because that's all you need to focus on. Now, we're not saying that you would have lasted and doubled your money, held up. Maybe you would have, but let's say you would have only taken a nice 10 or 20 point gain. All right, that's still fair enough. And you're looking to get back in. Well, here's when we finally started to sell off again. Now, here's a setup bar. It touched the median line that is ascending, same with all these three Donchian channels, but we never traded above it. And the next bars were not touching, so there's no valid setup bar anymore until right here. This was this bar right here. We traded below. That's okay. It doesn't matter if we're touching. We can be either touching or entirely below, but we never traded above it. Now here's this bar right here, okay? We're still above the 50-period moving average. All the Donchians are headed higher. This is a valid setup. But guess what? This monthly bar is this month. This is February of 2016. So is this a buy? Well, we don't know yet because this bar hasn't concluded. We don't know. If in March we trade above this bar on a monthly basis, that will be a valid buy setup to go long Apple again on a monthly chart for long-term investing. So we're not telling you should buy it. We're not recommending it. We're only suggesting that the strategy may be generating a buy setup. It still remains to be seen because we still have a little over a week left in the month. Now we can apply this to ETFs. Here are the spiders. Just about 2 weeks ago, we were below the 50-period moving average. All the Donchian channels are headed in the same downward stair-step progression. So are we going to be buying the spiders? No. Remember, the spiders of the ETF for the S&P 500 index. So we're not saying that you would have traded this, but maybe you would have wanted to look at this as some type of market timing tool because it represents the S&P 500. So price was hugging this bottom channel and started to bounce. But we couldn't sell anything until we touched the median line, which was right here. That was our setup bar, and you could have sold roughly around 192. And this was on the 2nd of February, and look what happened coming in. Now this represented this sell-off right here from 192 down to roughly about 10 or 11 points in a couple of weeks, represented a downward move of 800 points in the Dow. So you could have used that at a market timing tool. And remember, you don't have to purchase the stock. If you want to trade this, you could purchase directional options, directional calls, directional puts, depending on the signal. Now we can also apply this to commodities. Here's the weekly chart of the 10-year notes. As we see, we are above the 50-period moving average going back 3 years ago. Same concept applied. We have rising daunting channels, and then price is touching the top and starts to sell off. Here is our first setup bar, but we never traded above on these 10 years, and then we finally traded above here. So you could have been long the entire time coming into February of 2016 on this weekly time frame. No reason to worry about economic news or interest rates. It's all right here in front of you. We can also apply this to crude oil. Here is a weekly chart of crude oil. Everyone's wondering when crude oil is going to finally start going higher with some really high consistency and an upward trend. We're not interested. We don't care. We're just following whatever direction the market wants to do. Remember, our job as traders is twofold. The first rule is we just want to listen to what the market's trying to tell us. What direction does it want to go? How do we do that? By applying the 50-period moving average. So if we look back at this weekly chart, we have been below the 50-period moving average for over a year now. So we have in no way ever been interested in buying crude oil or any of the oil products. Oil service stocks, doesn't matter. Heating oil, it does not matter to us. As long as we are below the 50, we're only sellers. Since we're sellers, we apply the daunting channel if we want to apply this technique. And then once price starts to bounce, that's our setup bar. And then once we trade below, that's our entry right here. And then another one entering right here. So we've been getting sell signals the entire time in crude oil. We've been on the right side of the market. The only people that have lost in trading any oil products or futures are the people trying to pick a bottom. That's a recipe for disaster. It's much easier to swim with the current at your back than to swim upstream. Okay, we showed you stocks, we showed you commodities. Let's go into the E-mini futures now. I want to start out with this weekly chart going back roughly about 3 or 4 years, back to 2012. And I realize that not everyone trades the E-mini futures on a weekly time frame, but I just want to show you how well this concept can apply to any market, any time frame. We're still applying the daunting channels, we're still applying the 50-period moving average, and using the process I've just shared and taught you today. Look at all the buy setups you could have had going long the E-mini all the way back to roughly June of 2012. Okay, you could have used each one of these not to simply buy the E-mini or go long the market, but to use them as a directional tool to tell you or to give you confidence which direction you thought the market was going to be going. Now that's a weekly chart. Here's a 10-minute chart from last week. As you see right here in the lower left-hand corner, this was on the 18th. This was last Thursday. Okay, a 10-minute chart. All the daunting channels are headed stair-step lower. We are hugging a little bit, oscillating below the 50-period moving average, but for all intents and purposes, we are below. So these were the two sell setups we had. This was last week on a 10-minute chart. Each one you could have sold and roughly had a gain of roughly 6 to 8 points in the next hour. Okay, that's $300 per contract. If you had 10 contracts per trade, that's $3,000 per trade. And I want to show you this chart for specific purposes because, as I stated, so many people think that outside source is either someone telling them what to trade or telling them how to trade, or someone in a position of so-called power is in charge of their trading. And remember, as I've stated, you are in charge of your trading. Our goal at Specialist Trading is to put the power back in your hands. For some reason, we've been taught that this is just a loser's game. That's just like gambling, and it's just that basically there's no way anyone can make money. But the real reason is because we're relying on outside sources to tell us what to do. Okay. If you have the proper education, if you have the proper mentoring, the proper training, the proper tools, there's nothing that can really stand in your way. Now, we're not saying that you won't have losing trades every once in a while, but if you once again follow that two-step process of being in sync with what the market wants to do and then jumping on board, you'll have a high level of consistency in your trading, and you won't have to rely on other people or other things to tell you what to do. Here's a perfect case in point. As we look at this 5-minute chart of the E-mini, okay? We first ask ourselves, where is price in relation to the 50-period moving average? That's our first rule. Price is obviously below. So we do not want to buy anything here. There's no reason to be buying because we're below the 50, right? So that's the first step. We've automatically, in our opinion, eliminated half of our losing trades because we're in sync with the overall trend. And now we apply the Donchians, and we see that starting at this point, they're all started to head lower, okay? So from here on, we are looking for price to bounce, and once it touches, that's our first setup to go short on a 5-minute time frame. Well, we never traded below in the next bar, so this is our next setup bar. Okay, we're going to go short right here. We never traded below, so now this is the next setup bar. Okay, because they're all valid. We're all still rising. We're still below the 50, and the Donchians are still descending. Finally, we traded, it's hard to tell here because of the size of this chart, but we just traded below there by a tick or two. So you would have sold, this is our setup, and you would have sold on this bar here, okay? Let me show you how simple this is. Now, this doesn't look like anything significant. This doesn't look like it's anything different than a sideways market, but look what happened later on in the day. Because this was the flash crash going back around 6 years. I'm sure you're all familiar with that. This is where everyone in the world said, there's no way this little guy like us can make any money trading because the big guys, the institutions who are in charge of the market, can make the market go back and forth thousands of points at a time, and they hold all the cards. All these high-speed computer programs and all this frequency trading, it doesn't make sense for the little guy like me with a small $1,000 and $2,000 account to make any money. Don't ever think like that, because when you think like that, you're automatically telling the market, I don't know what to do. I have to rely on someone to tell me what to do. Remember, you should be able to make your own decisions. You have all the power you need and all the information and tools. You just need someone to mentor you. That's what we do. There's no reason any of our students lost money on this particular day. Why? Because, well, first of all, they weren't buying. Price was below the 50, so we knew that we weren't going to buy anything. So therefore, there's no reason to play the victim attitude that someone holds all the cards. We're in sync with the overall trend. And then once we added this simple technique, you could have had a lot of gains on this day. Why? Because you're following what the market wants to do, not listening to outside sources. Finally, let's move over to the Forex markets. I'm sure some of you trade currency pairs. Here's a weekly chart of the Canadian dollar. Same concepts apply. We don't change anything because we're trading in a different time frame or a different market. We're above the 50 period, so we're only buyers in the Canadian dollar on a weekly basis. We had the Donchian channels. We simply wait for price to come back and touch the median line, and then we just wait for price to trade above the previous bar, and that's our entry point. Here was one entry, and here was a second, and we've seen the Canadian dollar continue to go up until this week, or I should say this month. And then we can go to a daily bar of the British pound. The British pound has been steadily heading lower. Why? Well, we don't care what the fundamental news is. We don't care what's going on economically. The reason it's going lower is because it's below the 50. That's the only thing we look at and care about. Until we have consistent bars above the 50, we're sellers of the British pound. And look at all the sell signals that were generated. In fact, one was just generated a couple of weeks ago using this technique. Okay, so as we get ready to conclude here, remember, let's recap. This strategy is one of our most consistent pullback strategies and is one of our most popular. It trades stocks. It trades E-mini futures, the Forex markets, and commodities, okay? It works in any market, any time frame, any direction. If you're day trading, 1 to 3 trades per day on average. If you're position trading, possibly 2 trades per week. As always, learn this strategy like the back of your hand first. Don't jump in with both feet. Don't say, oh my goodness, here's a setup. I'm going to trade this with real money tomorrow. It doesn't work that way because I can almost promise you you'll lose money. Why? Because you haven't studied the process fully. You're not really sure about where to enter. You haven't watched this video enough, okay? Study this, learn this, as long as it takes, a couple of days, a couple of weeks, a couple of months. It doesn't matter. It'll always be there. Our edge is consistency. I'm not going to promise you that every trade is profitable, but remember, it's more about 2 steps forward, 1 step back. When we have losses, small losses from time to time, usually they're made back very quickly with the next signal or so, okay? So before I let you ask me any questions, I'd like to ask you one. Ask yourself and ask yourself honestly, do you think this strategy could have helped your trading this past year? All right, even if you say, well, Steve, this is not my cup of tea. I'm sorry. I've always taught that I have to look at support and resistance. I have to look at volume. I like going to trading rooms. I like listening to news. I like to get involved in that stuff. Okay. I'm not going to tell anyone the way they have to trade. That goes against my philosophy. Remember, you don't want anyone telling you how to trade. I'm trying to offer you things that have stood the test of time. But what if you just used one of these techniques? What if you just used the 50-period moving average, okay? In fact, why don't you go back and look at your last 10, 20 trades? I can almost guarantee that the reason why you had losses during those last 10 or 20 trades is because you were out of sync with the 50-period moving average. Go back and see how well that one simple technique could have helped you by only buying above the 50 and only selling below, okay? Now, what if I could offer you more information for a great, great discounted price, similar to what I offered you today? Okay, what if I could offer you the entire rules to this? Because if you noticed, I only gave you the entry rules. Didn't talk about stop placement. I didn't talk about where you exit. I didn't talk about money management. Well, here's what we'd like to offer you all today for so graciously attending this presentation. Here's our special attendee discount for all of you today. It's our Secrets of a Stock Exchange Specialist training sessions. This is a 3-hour video. It's a video seminar that I recorded roughly about 3 years ago when I spoke in Denver, okay? People spent good money to come see me speak. I was the featured speaker in front of hundreds of people, and they recorded the video, and this is what this is. This is 3 hours of trading techniques, but in the 3-hour sessions, what I did was I gave the complete rules, not just the entry technique, what I shared with you today, but the complete rules to strategy number 1. So you will know exactly where to enter. You'll know exactly where to place your stop. You'll know exactly where to exit. You'll know how to trade aggressively. You'll know how to trade this conservatively. You'll know how to track the trade if you'd like to stay in longer. Now, we don't just stop there. Included in this 3-hour session are many more high probability trading edges, very similar to what I just gave you today. Things like the Donchian channels. Well, they're completely different from that, but very high probability tools and techniques, okay? Such as what the number 1 chart pattern is, what you should be looking for in all strategies. I tell you which indicators to use and which ones not to use. I go into detail with the differences between a system versus a strategy. Remember, once again, the most important part of this is that you are getting the complete rules, strategy number 1, and you are a lifetime student of mine, so you get my personal email address and you have lifetime correspondence with me. Now, as I stated, I did this 3 years ago in Denver, Colorado, where I was the featured speaker at a seminar there, all right? I spoke in front of hundreds of people. This is a very valuable piece of information because it's 3 hours of jam-packed information and a complete trading strategy. My sister site, Pro Trader Strategies, which markets all of my courses and techniques, they have this promoted on their website for close to $1,000. But we're offering the exact same package to all the attendees today for a deep, deep discounted price of only $37. This is a great price to get a full strategy, all the entry, exit, stop placement rules, as well as 2 more hours of high probability trading edges that are entirely different from the strategy itself. All this information yours for $37 only, as well as lifetime correspondence with myself. So if you're interested in taking advantage of this offer, because it's for a limited time only, I believe only for the next 2 days, here's how to sign up and register for this. Once again, contact Pro Trader Strategies. You'll see that's their email address right there. If you'd like to call them directly, that's their phone number. But if you want to just simply go to the sign-up page for that $37 deal, that is the link at the very bottom of this more information page. But if you notice, it's not a live link, so you're going to have to copy and paste that onto a browser. If you would like to go to a live link, I believe it's going to be posted right now. If you look to your right-hand column of the GoToWebinar page, you'll see under the chat box, there is a live link posted. All you have to do is simply click that on, and it will take you to the sign-up page. okay? Now, please remember, if you're having any difficulty or if it's not registering for some reason, you can always contact Pro Trader Strategies. You can email them and say you attended the presentation and you want to get the $37 deal, or call them directly and they can give you much more information as well. Now, I'm going to leave all this information up, but please remember, this is only going to be lasting for a couple of days, and then the price goes back to $1,000. I don't think you want to waste this valuable time just to spend such a small price of $37 only for so much valuable information. So really take advantage of it. And as well, remember, you are a lifetime student of mine as well. Okay, once again, I thank you for waiting for any questions. I'm going to open up the question and answer box, and thank you for holding off. Let me see here. Henry is asking, is anyone there? I can't hear anybody. Well, Henry, there must have been something wrong with your browser, because I think everyone was able to hear me. It looks like everyone was available for this, so I think we should be okay. Henry, if you had difficulty or if your computer came back up and you're able to just get a portion of this presentation, all you have to do is simply contact Pro Trader Strategies. They'll send you a link to this webinar because we record everything. But please remember that don't take your time watching this presentation if you wanted to request the recording, because this $37 offer is only good for the next couple of days, okay? Simran asked if I could recap the strategy quickly. Okay, I don't want to go and, go back and reverse and go back to the actual slides with all the rules on them. Just remember that it's a two-step process, okay, Simran? The first step is you apply the 50-period moving average, all right? If price is above the 50-period moving average, then you're going to be a buyer. The second process is you apply the Donchian channels. You want to see that all three are headed in the same upward direction. If they're headed in the upward direction, then you want to see a sell-off. Price starts to decline. When price declines, it touches the median line, and that is your setup. Now, you just want to track the trade and purchase one tick above the setup bar. And that's it. Now remember, that's just a very quick summary because I've just spoken for the last hour on the rules. If you weren't able to get them, simply request the link to this presentation, okay? And you can watch them at your leisure. But please remember, that $37 deal will not last long, okay? Let's see here. Jim says, I only trade Forex. Is it a good method for me? Well, yes, Jim, I just showed you a couple of Forex examples, and we have a number of students who only trade the Forex and who use this exclusively. In fact, they use this anywhere from weekly bars, as I showed you, to actual just tick charts. So yes, as I stated, any market, any time frame, any direction. So all we're trying to do is listen to what the market tells us, and then we jump on board. What this technique does is it gives us the structure to know what the market is telling us, and it gives us the structure to know when to enter. It's a great technique, and trust me, I mean, I don't think you can go out to dinner for less than $100 these days. We're offering you this jam-packed 3-hour video session for only $37. I can almost suspect that many of you probably spent more of that trading today, just with your commission costs alone. So it's a great amount of information for a very low, inexpensive price. And once again, if you wait too long, it will be back to close to $1,000. So I would really take advantage of that. You can't go wrong, in my opinion, for only $37 with all the information that is provided, okay? Once again, if you see that link at the very bottom of the page, that is the sign-up page that will take you to the $37 deal. But remember, that is not live. That is just simply a static PowerPoint presentation. You have to copy and paste that onto your browser. If you want to just click on the live link, go to the chat box on your GoToWebinar column on the far right and click on that live link posted under the chat box. It will automatically take you to this $37 deal. If you're still having difficulty, something wrong with your browser, you can't access that link, just contact Pro Trader Strategies. Tell them you were in the presentation and they will honor the $37 deal, okay? In conclusion, I just want to say this is great information. It's really, in my opinion, going to help. These are techniques I continue to use to this day with my own personal trading, okay? And I think included with the strategy, all the rules, all the information, money management, stop placement, exit points, all the other finely tuned edges that I present in the presentation. I think also one of the great benefits of this is you're my student for lifetime now. You can contact me whenever you like. So if you have a question, if something doesn't make sense, or if you want more information, you can always contact me. So this also is included in the $37 deal. I'm your personal mentor for life now. So please, in my opinion, do not hesitate to take advantage of this. It's not going to last long. In closing, I hope you all like this. I hope you all were able to get some information out of this. And I really hope that you come aboard and take advantage of this great discounted deal. And I look forward to all of you becoming students and members of my Specialist Trading. Thank you so much for attending. I'll see you next time. Bye-bye.